The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, looking good, Billy Ray, feeling good, Lewis. The snow is gone in Tucson, and we're back to 75 degrees. Life is good. Let's take a look at the German DAX and the FTSE like we always do, and then we will move on to the big daddy rabbit in the hole today, and that is the silver. You can see here that the DAX and the FTSE each had a little bit of a rally. We were down quite sharply, around about 30 handles, I guess, in the S&P last night. In fact, it was early Sunday and rallied another 95 points, pretty much like as expected. We'll cover that in just a minute, but I think the best thing I can do for you folks is share you a little bit of history. Been around a long time doing this, so been there, done that. I wanted to show you here a little bit about the silver market. I'll tell you, this is what I was looking at last night. We hit a high of 29.28. We dropped about 70 cents, rallied up to exactly 382, and from that level we went all the way down to 28.05, I believe. Those were equal ABCDs, by the way. But the market was moving so fast, by the time I sent this out, it had already dropped 35 cents. So it was very, very active. Okay, let me try to give you my 10 cents worth of what's going on. 40 years ago, on January the 20th, we had a top in gold at $863 an ounce. The top on silver was showing on the board at around $54 to $55 an ounce because it was going up the limit. And folks, that was a false chart, a false price. Silver actually never traded above $37 an ounce. The reason why I know that, I was hedging for A-Mark, and I was hedging for Bob Gilmillion. I was hedging for American Coin, Leroy Linhart, and one other person, and the actual bags never went higher than $36,000, which was equivalent to about $37 an ounce on silver, a little bit more or less. But that's the real skinny. What happened? The market was going up. The limit was, I think, 50 cents a day at that time, and it was going limit up. And they had increased the margin by, I think it was 200%, as my recollection was. In other words, you had to have $75,000 in your account to even trade a contract of silver. That's how crazy it was. It was really tough. And what was happening was it was Nelson Bunker Hunt. Nelson Bunker Hunt and his brother Lacey. I don't know if there is a limit anymore, Z. I don't think there is. I think it trades without a limit. If there is, it's way up there. I'll have to check that. I never even thought of that. But the market was going up, and Nelson Bunker Hunt and his brother Lacey trading out of Houston, Texas, and they were trading out of the Drexel office. So I got really good information of what was going on there. I talked to the broker for those guys several times because I had by then I was out. I got out of all the silver, I had a little bit of silver, not much. All the positions I had were in gold, and I got out of that on January the 8th, or above 600, just a little shy of 700. And of course, it went to another $160 higher to $863. But as the market kept going up and up and up, you could see that silver was going limit, as I recall. And that a limit at that time was about 50 cents, which was around $2,500. And we went from 30 to 50, just in a matter of a few weeks. It was just a tremendous frenzy. Then they tried something different. They raised the margin as much as they could, but they couldn't get anybody out of the market. So the Mercantile Exchange members who controlled all that stuff, right, of which Drexel had a big part of that, they decided to play a new game. And the game was new orders only, liquidation only. Thank you, Mr. Z. You in the house. I remember that. And I have to tell you the story about the high day in the gold market on that day on January the 20th. December gold, this was January of 1980. December of 1980, 11 and a half months out, December gold was trading over $1,000 an ounce. And that means the spot was at $863. Limit was $50, and it was up $12 over the limit at that time. And I called up Drexel, and I talked to the Goldberg brothers, who was they were our clearing member there, and I talked to the youngest one, Richie, and he said, I said, Richie, what does it look like in the pit there? And he said, they're belly to brisket, man. He said they're just everywhere. He said there's all kinds of trading going on. I said, Rich, I said, Richie, how come there be trading going on when everything's lock limit? He says, well, they're in there, and no, it was Goldberg Brothers out of New York. They got taken over by somebody later on, but he said, and I said, how about in the silver? He said, well, there's not very many people in the silver pit. He said, but the gold is pretty good. I said, okay, Richie, I said, I want to sell a Christmas gold, December gold. I gave him the price. It was like $1,030 or something like that. Can't remember the exact number. And he said, oh, Larry, he said, don't do that. He said, you're one of our best customers. He said, I don't want to see you lose everything. I said, Richie, I sell in one contract. I'm hardly going to lose everything. I said, Richie, how long have you been down there? He said, I've been down here almost a year. I said, I said, Richie, why don't you sell me two? And he went really sad. He said, you're kidding? And I said, no. I said, sell two. I said, limit up. He says, he said, you're real smart, I said, well, yeah, I know, Richie, but I've been doing this a long time and I can afford it, and we'll see what happens. And then he put the order in. I waited on the phone. We had to call the orders in. It wasn't this instantaneous stuff that we have now. And he got back to me and he said, okay, he said, you're filled. I said, okay, Richie. I said, put an order in to buy two, limit down. And he was real quiet. He said, they won't take that order. I said, Richie, they will take that order. They have to take the order because it's a valid order. He says, I think you've lost your mind. I said, yeah, well, I probably did that years ago, but this is what I'm going to do. So he gave me the order back, the order number to buy it back. That was $100. There was a $50 limit, so I was buying it. I sold it 50 higher. I was going to buy it 50 lower. They hadn't had that happen since gold started trading. It happened maybe once or twice, possibly. But anyway, he said, okay, folks, you're not going to believe this, but about 20 minutes after that order was placed and I talked to him, I got filled. It went from limit up to limit down. That's a $100 move in gold. Then it started to trade a little bit. It started 20 up, 20 down, all that stuff. But that day I went out and I bought I figured I got really lucky was all, and I bought a new car. But anyway, that's what happened. But the thing they did to change everything was liquidation only. And you're starting to see that in the story that's going on right now, folks. So just be really careful when you're trading that silver and you're trading it without a stop. The trading gods are not on your side. I got a little bit more on the silver when we get back. 877-927-6648.
If you're not currently using the TAS Profile Scanner when looking at setting up your trading opportunities, then your arsenal is short a mighty weapon. The TAS Profile Scanner is a standalone piece of software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, Taz understands that in today's technological world, the use of top-flight software applications and technical analysis expertise is essential to successful trading in today's market. You also gain access to the webinar that Steve Dahl and Tom O'Brien just hosted, The Best Way to Use the Taz Profile Scanner to Profit. This webinar archive is available for all subscribers immediately upon signing up. All new subscriptions also come with a 30-day money-back guarantee, so you have nothing to risk. Start your subscription by visiting the front page of TFNN.com today, and you'll find the Taz Profile Scanner under the Services tab. Sign up today. Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
Hey there, I'm Andy Arbertine with Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I posted the ETF for silver, SLV, and you can see here that it has been very, very strong here recently. The futures have certainly caught up with with this and we traded at $30. You can see here we were at $25 on Friday, but if you take a look here at the long-term view here of this SLV. Let me get it up here so you can see it. This is the ultra short. Now I'm going to show you, this is where the real problem lies here. Get ready here. You'll see here, you can see the ultra short silver ETF. That's at $6.34. That's a daily chart. Folks, look what's happened to the weekly chart in this SLV. Oh, please have it, Larry. Please have it. What did I do with it? Oh, here it is. Here is the long-term picture in that. You can see here that the real bullishness in silver started back at 58, and now this thing is trading at 634. Now, this is where the players are with the Reddit. So if you're in that stuff, make sure if you're trading the silver, use a stop unless you've got, great deal of what do you call it? A capital and a lot of patience, because you could get hurt really badly here. I've heard stories from some of my friends and subscribers here that sent some stuff out saying that this stuff would go to $1,000 an ounce in silver. Now, I've heard some crazy things in my life, but that's the kind of stuff that's out there during that time. So be very, very careful. We live in interesting times, is the old Chinese curse, and we could easily, see that stuff go absolutely crazy. Now, one of the other things that I wanted to show you, if I have that here, and I'll have it for you tomorrow. But the way they've set these up, these fellows on the Read It, they're watching the 10 stocks that fit the parameters for these short covering things. In other words, a stock that has more outstanding shorts than it does regular stocks. That's one thing, and then it has to have a relatively easy volume to trade. And the third thing is it has options involved with it. But you're not seeing option trading here in the middle of the night, folks. You're seeing regular flat trading. That's why during the market hours that we're coming up here, pretty soon when the stock exchange opens, that's when it could really get dicey. So be really careful, because these things are really, really careful. So are really, really crazy, and I don't want you to get hurt. And I am not involved in the silver. I tried buying the gold last night for everybody, and we missed it by just a hair's breadth. And so that's it. A couple of things I wanted to do before we get to the stocks here is the hold on here. We got something beeping now, and there we go. Okay, that's what I wanted to see. All righty. Okay, hold on just one second, boys and girls. All right, now we're going to take a interesting shot here at the. We'll be looking. Hold on one second. I got to do other things. I want to go over the stock market first here, and then we'll cover some of the other things. Here's what we were looking at in the stock market last night, and I sent this out, and we had the ABCD pattern forming. You can see these little ABCD patterns that happened. This is what you can see. We had three of them. We had one here on Friday, right up there at the high at 37.74. Then we came down, made another one late Friday, right there at 37.38. And that ABCD structure went down, and we'll take a quick look at what happened to it, because it fulfilled it just about absolutely perfectly. If I can find the chart. I'm sorry to bring this up, but I've been up most of the night watching silver for a friend of mine that was heavily involved in it and did extremely well. And now I can't find the darn S&P. Shut the front door and raise the rent. I got about 40 of these things on my desktop, and I'm not able to simulate it all at one time. Anyway, we did go down to 36.60, which was the ABCD of that last one that formed. Okay, and now we've rallied up 90 handles. Now, from my perspective, the two things to watch are the high at 37.47 that we made last night, and then the big 618 retracement of that whole move comes in at 37.76, as I recall. So those are the two numbers to watch as you're looking at this thing here here this morning. I believe I can get that S&P up if I'm lucky. Give me 1 second here, and hold on just a second, and we'll be right with you. Hold on. Where is it? Yep. Here we go. 1 second here. Should be all right. I think that was, I'm hoping anyway. That doesn't do it. Let's do one other one. Here it is. There, you'll get this up here, and you'll see it, and then we'll be able to take a look at it. Okay, here's what we got going on right now. Okay, there's what we have moving on like that, and that's what we're watching. So anyway, let's keep a close eye on that, and we'll watch it unfold as we speak here. Okay, we got crude oil approaching the $53 a barrel level, still in a nice trading range with that high at 54.45. That'll be interesting to see, what happens with it over the next few weeks, to see if it's going to bust through to the upside. These next few weeks for these markets are going to be very, very volatile, folks. And I mentioned several times that the volatility that we're starting to see now will continue, I believe, through most of 2021. That's what it looks like from the way we're watching it. So we'll keep a close eye on that, and we'll not too worry about it. Okay. Let's move on to the other one here that we got moving on. Just 1 second here. I want to get this up here and take a quick look at it. And that is the chart of the new moons. Let me get this up here. You want to see some beautiful symmetry, folks, and the Fibonacci spiral in action. I want you to see the moon phases for 2021. This is sent to us by one of our listeners, and it shows you the mathematical spiral that we're looking at. That's the golden ratio, and that's what we look at when we're doing all these patterns. We're fitting these in to some of the things that we're looking at. So that's what we're paying attention to, and we will keep a close eye on that tonight and tomorrow and all the next days. Now, let's go back to the history books just a tiny bit. This goes back to the 1900s when we had the same types of pools that were doing short covering stuff. This is showing you the story of Northern Pacific, which was one of the biggest stocks during that time of 1901. It traded at 115, and then a couple of days later, it was trading at 143. On May 8th, it was up to 160. On May 9th, it was a remarkable day. It hit a high of $1,000, but ended up at $325 for the day. And that stock was taken over at about $10 a share, as I know. But on the next day, it went all the way back to $150, $1,000 to $150. So what we're seeing now is nothing more than what happened in the past. There's really there's nothing really any difference. The difference is it's a different time frame. And we have social media instead of bucket shops. And believe me, there's a lot of people out there, 13 million of these folks on Reddit. That's what I understand. We'll be right back, folks.
Larry Pesavento watches the markets 24/7, and now is a great time to try out his daily trading service, Fibonacci 24/7. Larry publishes videos and charts for subscribers throughout the week when warranted, and every weekend he puts out a thorough report covering worldwide markets, futures, commodities, and currencies with Fibonacci retracement levels, possible trading setups and zones, and stops and targets for all recommendations included. Larry applies the principles he's developed over decades of trading while analyzing a variety of markets for subscribers. To see for yourself the types of videos, charts, and analysis that Larry provides for his subscribers, sign up for Fibonacci 24/7 today by visiting the front page of TFNN.com under the newsletter tab. You'll also gain instant access to Larry's archived subscriber webinar from earlier this year. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today. If you're a trader in the market looking to find the path that leads to maximizing profits while decreasing risk, then now is a great time to try out Dave White's daily trading service, The Path of Least Resistance. Through the use of options and equity trades, Dave advises his subscribers on a daily basis of the current market conditions and what possible trade setups are on the horizon. The Path of Least Resistance is published every trading morning, often with updates intraday when initiating trades or closing out positions. Dave White has advised his clients of some outstanding winning options and equity trades in recent months, and now is a great time to try it out for yourself. New subscribers to the Path of Least Resistance receive a 30-day money-back guarantee. See for yourself the types of options and equity trades that are available by signing up for the Path of Least Resistance today by visiting the front page of TFNN.com and selecting the newsletter tab. Sign up today. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, I want to share with you one of the best values that you can possibly buy, and that is the little old-fashioned eggs. This is the price of eggs since the last couple of years. You can see here we've been going down from about $3. This is $3 a dozen. We're down to about somewhere between 90 to a dollar a dozen right now, folks. This is really one of the biggest surprises. They don't trade eggs anymore. They haven't since Milo King ruined the market back in the early 70s. He reneged on a bunch of contracts and it destroyed the egg contract. But anyway, as we look at this, the egg basically is pure protein, one of the better foods in life, actually, along with the soybeans and a few others. But it is pure protein, and it is made up basically of corn and soybean meal. That's what they feed the chickens. And the price of corn is approaching $6 a bushel. And the price of beans are in the teens, above, $13. And yet we got the very, very unusual price of eggs. So there's a great deal of I was really shocked. I thought eggs would be a lot higher in price, given the fact that we have such a hard way to feed those chickens, and that's with the meal and the beans. So it's really quite amazing. So anyway, let's move on to a couple other things that look interesting. I had a really interesting buy signal in the gold on Friday, but unfortunately it didn't do what I wanted it to do. Get this up here to take a look at it. And basically what I was looking at was the fact that we had this really beautiful 135 pattern there. And as you can see, it bottomed at 1845. And then the market on Sunday night, of course, went all the way up to 1785. And if you can visualize a head and shoulders pattern, there was certainly one there. Then it came all the way back down to the 1851 level, and we had an order setting there at 1849.80, and that didn't quite get filled. And then, of course, it went up and made rallied another $15 or $20. Now, you got to realize something, folks. What's going on here is a movement in this stuff with Read It. This is not going to go away, boys and girls. I don't believe it is. I think it's something just getting started. And, they might, everybody's talking about it's a big battle between the little guys in Wall Street. Yes, that's true. But the way they'll do this is they will start increasing the margins. And what they're going to do is say we're increasing the margins so that we're protecting our customers and ourselves. And that's exactly what they should do. Then there'll be other restrictions. They'll take some of the stocks that are really going crazy and put it on limited execution only, or liquidation only. When you start to see that, that's when it's going to have a big problem. Now, with the silver in 1980, everybody was against that, and the reason why is it was the Hunt brothers, along with their friends from Saudi Arabia, that were really controlling the market. They really did, and so the only way they could do that was by increasing the market by margins by 200%. And the second thing they did was they, which was the big one, which was liquidation only. When liquidation only hit, I think it went down 22 days in a row. I mean, this going back 40 years, my memory is a tiny bit foggy there, but I believe it was around 22 days in a row it went down. And most of them were limit down because they never changed the limit. There was no limit on the spot gold. Even in 1980, on January 20th, spot gold was up $63 an ounce, and all the other contracts were $50. So there's a lot of news coming out. A lot of it will be false and stuff, but pay attention. What happened in the past during 1980 happened again in 1901 and in 1930 during the big run-up in stocks to the high of September 3rd. 1929. So that's the kind of thing that you're seeing. So this is a big thing. This is the one that you've got a silver market. It's a very, very large market. And when you see it up $2.50, folks, this thing could go $10 or $15 in a day. It really could, because if they're playing the option games correctly and they've got these guys trapped, that could happen. So be really careful, both on the long side and on the short side. But when you see things like this happening, they usually end badly, especially something like GameStop. That's not the silver market, folks. The silver market is billions of dollars. You know, the GameStop thing is not a big deal at all. That's like Northern Pacific Railroad. You know, there's no difference there. But the silver market is a huge, international market that has a whole lot of people involved in it. I got a report from one of my friends in the coin business last night that there's something like 292 million ounces short, if that's the case. So we'll see what's going on. Also, Ameritrade is doing some things, but folks, they're using that as a way to protect themselves, and they really should. Remember, folks, when we see things like this happening, the number one thing as far as protection is the exchange itself. The second tier is the exchange members. These are guys that own seats on the thing. The third level of protection is the brokerage houses, okay? And the fourth level of protection is raise your hand, because that's it. That's it. Also, you're going to see the prices coming through, or your orders, if you're doing that, is going to be slower and slower because they just can't handle it all. And what will happen is, this is the kind of thing that blockchains are supposed to be able to take care of, and that's probably where we're leading down the road here this year, next year, sometime in the future, as blockchains will be, more and more important. But right now we don't have that, and we'll see if that's the case. You can read a lot of this stuff on the internet if you want. I have someone that shows me the key points that I try to share with you, but the one thing I know for sure is the history, because I lived it back in 1979 and 80 and every day since. So, but those were the things that were happening during that time. I remember it very, very vividly. Okay, let's take a look here at what the markets are doing this morning, and we will be right back with you here. Hold on here, and we are trading at 37.45 here in the S&P here this morning. The next thing we want to take a look at is the gold market. We're trading around 1869. Silver's near a new high here at $30. Now this is the time to be watching silver, folks, because the market's going to be open and those options are going to be open, and that's where the volatility could really get dicey. So be really, really careful as you're doing this stuff. So that's my 2 cents worth as we keep an eye on this here. So those are the main things. The euro position that we have, let's bring this up because it started to work nicely again. We got below that key level of 121, and you'll see here that's very, very important. Now, if we're in this, I wanted to show you this euro position for several different reasons. But if you'll just look at this goes back to November. Look how many times you see that 382 retracement in there, folks, and the 61% retracement. I mean, it's really a mathematical precision. Anyway, we'll be right back. 877-927-6648.
Hi, folks. This is Tom O'Brien. The printing presses are working 24 hours a day, 7 days a week. The U.S. deficit has risen 200% in 1 year with no end in sight. The markets are looking for an additional stimulus bill to get us through this once-in-a-generation pandemic. There is no free lunch, folks. The more stimulus dollars put into the marketplace, the less your dollar is worth each and every day. This is the time to protect yourself with a portion of your portfolio in the metal market. The gold report comes out each Monday morning. I bisect and dissect the dollar, silver, gold, the XAU, and the HUI. The gold report is a long-term hedge against the dilution of your buying power. The U.S. has put more than $6 trillion into the marketplace in the last 6 months, with more expected in the next few months. The market did and does need the stimulus, but it will have long-term implications on our buying power. The Gold Report comes with a 30-day money-back guarantee. Go to TFNN.com and order the Gold Report now. Protect your buying power. Order the Gold Report now.
Will the S&P 500 continue to climb? For bold trades on U.S. large-cap stocks in either direction, trade SPXL, SPUU, or SPXS. Directions Daily S&P 500 Bull and Bear Leveraged ETFs. Direction Leveraged ETFs. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contain this and other information about Direction shares. To obtain a fund's prospectus and summary prospectus, call 866-476-7523 or visit directioninvestments.com. A fund's prospectus and summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tiger Precious Metals and Stones. Whether you're looking to buy and sell precious metals or trying to find the perfect diamond ring, I'm here to help. I have over 15 years of experience with diamonds and precious metals. You can call me directly at 727-329-8245, and I will personally answer any questions you have and help you find exactly what you're looking for. I will be your personal concierge in the metal and stone business. Give me a call today, 727-329-8245.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition, pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
The Bull Bear Trading Hour with Tom and Tommy O'Brien. Next.
Okay, we're back, folks. I've had a couple of requests here. One is to take a look at the hold on one second. I'll get it up here. Is the natural gas. We'll take a quick look here and get it up here to see it. Now, we had a low here on Friday, and now the natural gas gapped up sharply today, and we're up about 12 or 13 cents, I believe. Oh, we're actually up 17 cents in the natural gas, so that could be very, very interesting. We're almost ready to take out that 73. In fact, we took it out. Wow. So that low we had Friday was very significant in the natural gas. We thought it was going to get down to 252. It only got down to 255 and then left the station. And it looks like we're going to make a big ABCD up there at around $3. So there's definitely been a change in the natural gas here over the weekend. Maybe the natural gas trees have had not been able to get any water. All right, let's move on here to another one that someone asked to talk about here, and that is the basically get this up here is the corn. We've been watching corn for quite some time. We have a possibility here of seeing the corn make a top up here between that 555 and 560 level. We hit 555 last night, and we're now trading at 545. It's dropped 10 cents, which isn't very much, but that covers your risk if you were doing that. So that's one good thing that comes from looking at these technical charts. But remember, that's basically Hecla is up 40%. Somebody's really getting hammered in those options, folks, those stocks. Let's take a look since the gold miners. Yeah, let's see how much the gold miners are running today, folks. Let's get this up here 1 second here. That's the GDX, and that's been one of the things that I've been following closely to tell whether this is going to be a big bull market or not. Frankly, this thing that's going on with these dudes, this could go on for a very, very long time. There we go. There we got that. Want to do the daily here, and let's see where we haven't opened yet because I get delayed data, and because I don't do any stocks at all. Let's see that we closed here. This is the what we were looking for here. This might have been a major double bottom. Well, we're going to gap up so much, it's certainly going to be a double bottom. Let's get this here. so we can take a quick look at it here. There's someone tell me where the GDX is trading, please, because we had a low of 34.51. We thought we could get to 30.60, but we're going to be gapping up, quite a bit here. We just made a new high in the silver at 30.13, but there it just opened at 36.01. So it's up, it's up a little bit, quite a bit from 54. It's up a little bit, yeah. So that could be the sign of something big, but this could end any time, folks. But in the silver. But the thing is, with the Reddit thing that's going on, I don't believe that's going to change, folks. If you listen to Tom Sosnoff, he was on CNBC the other day, and he said this was a movement. He said this is people giving the little guy a chance. They come in Wall Street, they can buy 1/1,000,000th of a share. In other words, you can put up $40 and buy 1/1,000,000th of a share of Amazon. So, that's what's going on. Now, I don't know if this is going to be like the bucket shops of 29. Usually they say that it is, but, who knows whatever happens. You know what I mean? So that's the main thing to keep in mind as you're moving along here. Now, one of the things that we watch each day is, because we love trading crude oil, is we watch crude oil because it trades in harmonic numbers it's just like magic. And if you look at it today in the crude oil, I'm going to post a chart here. This is over the last 5 trading days. You can see those black, dark lines that I put in. Those are the harmonic numbers for crude oil. The number today was 53.10, and the high was 53.13, and we're already trading at 52.70. So that makes you're basically a break-even trade there if you're doing that. So that's what I'm watching. I keep your cards close to your vest and try not to overextend yourself on everything. Folks, I've been doing this show here for 14 years. There's nothing more important than protecting yourself in a stop here. Bo was saying, but could GME be a red herring? Get the little guys. Well, of course that's what it is. That's exactly right. I mean, first of all, most of those people have no idea what short selling is. We went to dinner Friday night with friends from my wife's Mahjong group, and they didn't know what short selling was. I tried to explain it to them. And, the fact that there's illiquidity in there. And remember, when these things go up, many times you're seeing those bids, they're just raising their offers. And so they're talking, and the stuff that's out there that is fake news is unbelievable. I read a few comments that some of our friends here sent to me about what's going on. One of them was the silver going to $1,000 an ounce. I mean, oh boy, if it does. Anyway, yes, that beautiful 135 pattern sell signal in the crude oil. That's why I set it out, to let people see that, you'd be able to see that was the thing that you were looking at. Anyway, as we go through here, we want to keep in mind that we have to be careful when you're trading now to protect yourself in just about any market, because that's it. Yeah, $1,000 an ounce, that would definitely be an outlier event. Hey, look, we did have a legitimate top in silver back in 2011 at $54. That was a legitimate one because it was trading. There was no restrictions or anything. But the one in 1980, silver actually never went above the level of $37. I know that is a flat out fact. If you find anybody that works for Handy and Hardham or any of those other gold mine or those refining companies, and they'll tell you that that's what happened in silver back in those days. And when I was at Drexel, Mike Marcus, one of the big guys, was running that silver when he was trading at Commodity Corporation. His account was traded at Drexel. I didn't have anything to do with it. Somebody else did. But we got Mr. Z on the line. Mr. Z, what it be? How are you doing, my friend? Hey, I can't hear you, Mr. Z. Something's wrong with the... There you go. You're coming in now.
Yeah, I'm doing very well. Glad you're doing the same. And I recall vividly when you started at TFNN, when Tom and you met at some gold show or Market Traders Expo.
Yep.
And you came in with a cameo appearance or two, and shortly thereafter you started your own show. So I I remember that vividly, and I'm indebted to all the things that you've taught me over the years. So let's keep it going.
Well, let's hope so. Tell me what your feeling is on the silver, buddy. Give me your skinny on what you see.
I think the key idea that I shared in the den earlier, I don't even remember the number now, based upon that August to November decline in silver, so long as you hold above 29.80, which we're not, we haven't proven that yet. 29.80 was the August high. But if we hold above that for a couple of days, I'm just using one of your tools, and that is a fib expansion up at the 1272 would be a reasonable target. And I can't find it in my notes right now, but it's higher, whatever it is. So,
hey, Chief, you can find it. Stay with us, okay? We'll be right back, all right?
Thank you.
Got to pay a few bills. Thanks, buddy.
Back in the day, I joined Hotel California in 2006, and like many of you, was drawn in by, as well as...
Whatever you think about, you bring about. Whatever you focus on grows.
You see, I believe that everything in life happens for us, not to us, and Tom ignited the fire within me to want to learn how to master the markets. So how did I go from knowing nothing about technical analysis to becoming the #1 market timer for the S&P 500 in 2018 and the #2 market timer in 2019? Simply put, I hired coaches with a proven track record, which led me to a whole new set of tools that I created to interpret the message of buyers and sellers. I would love the opportunity to teach you this award-winning set of tools and to help you improve your market timing. You can test drive my newsletter service, Mastering Probabilities, for the next 30 days with no risk to you. Plus, you'll gain access to archive workshops that'll take you step by step through my system. Sign up today by going to the homepage of TFNN.com and selecting Mastering Probability in the newsletter tab.
If you haven't checked out the newsletters page of TFNN.com, what are you waiting for? All of the TFNN newsletters are informative, up-to-date, affordable, and a must-have for every trader looking to gain a competitive informational edge in today's markets. TFNN newsletters cover every aspect of the markets to offer you the very latest in market news. Plus, new subscribers get to test drive our newsletters risk-free for 30 days. From all aspects of the markets, including stocks, bonds, metals, commodities, and tech, there's a newsletter to fit your needs exclusively from TFNN. Stay informed each day you trade and get that competitive edge that will help you stay ahead of the game. Visit our newsletters page by going to TFNN.com and click the newsletters button near the top of the page. TFNN.com, educating investors.
With markets trading with extreme volatility and peaks and troughs everywhere, regardless of what you're looking at in the markets, this is a great time to see the type of analysis Basil Chapman delivers for his subscribers every market day with the Opening Call newsletter. Basil has been analyzing markets, providing his take for subscribers to his trading services since 1984. Every morning, Basil publishes an update for his subscribers, along with weekend and evening updates when warranted. The Opening Call provides traders a daily market overview with regard to the direction of the key indices, selective stocks, and commodities, along with specific recommendations, including stops and targets. You also gain instant access to Basil's subscriber webinar archive from earlier this year, a dark cloud cover, and essential market analysis. Ride the Chapman wave today by signing up for the Opening Call newsletter on the front page of TFNN.com under the newsletter tab. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Sign up today.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and we're talking with Mr. Z from Philadelphia. John, I posted a chart for the SPY that you asked to put in the den there. So you have any comments on that?
An observation to share with you and your listeners. Real simple. Clearly, we have a short-term downtrend now established. A number of your guests independently have targeted mid-February, February 10th to be exact, as a cycle low. I share this with you. I am tracking an analog very closely. Here's the idea. 2009 and 2020 identical. March low, December 31st tops. The rally in 2009 was 69% from that bottom to the high. 2020, from the March bottom to the December 31st top or high, 71%. 69 versus 71, identical time periods. In 2010, the S&P topped third week of January and declined into mid-February. Well, we've topped here in January and we're declining. So if the analog continues, we'll get a decline and then tradable low February 10th, give or take. That's an analog. That guarantees nothing, as you and I both know. But I'm tracking that. Others might be interested in tracking that themselves. That's all I had for you.
Well, I'll put that on my watch list because I respect your work a great deal. We want to thank you for joining us, John, and be safe. And are you in the East or are you in the Midwest these days? I'm
out in the frozen tundra.
Oh, boy. Well, be careful. What is it? About the high of the day is about minus 10?
You got it.
Hey, thank you, my friend. May God bless. Live every day in an attitude of gratitude, my folks. And remember to do something for your neighbors because many of them are hurting really badly. If you check in on them, you'll be surprised to see how badly some of them are doing just as far as being able to get food. We'll see you all tomorrow.